Good afternoon. Thanks for joining us for a Sprague Market Brief. This is Taylor Hudson, accompanied by Hugh McNaughton. So what we wanted to talk about in today's market brief was a big event that's going to be getting a lot more attention as we get to the end of March. I went on to the CME Group website this morning, and front and center was this banner talking about the NYMEX heating oil futures change to ULSD. Excitement is building. So we're going to focus on what is going to happen at the end of this month in terms of the futures market and how it impacts your daily business. So I'm going to start with a very interesting conversation I had over Instant Messenger yesterday with one of our more astute customers. And you can see that conversation right here in the slide. And the customer is asking me, Taylor, why is May 13 NYMEX Merck contract so much more than the prompt month? And I took a quick screenshot before we came in here of where these contracts are trading right now. Again, this is a screenshot right off of CMEgroup.com. April 2013. Heating oil futures are trading just under $2.97 right now, and May is available for just under $3.05. So there's quite a big 8-cent price spread between the two. Not a heck of a lot different than what you might see on the gasoline futures market when we are looking at one grade, perhaps winter grade gasoline versus summer grade gasoline, that sort of thing. In any case, the way I answered this question was really what the conversation is all about, and that is that the cash market product that is deliverable against these two futures contracts is different. That's what the switch is all about. The April 2013 heating oil contract, heating oil futures contract, is the last contract that you can ever buy on the NYMEX and then take delivery of high sulfur heating oil in New York Harbor against. Starting with the May 2013 NYMEX heating oil futures contract, what you take delivery of cannot be high sulfur. It has to be ultra low sulfur. And since right now there is a fairly wide, you could say, spread between those two prices in the cash market, ULSD roughly 8 cents higher than heating oil. We think that the futures difference of 8 cents is essentially just reflecting the fact that in the cash market there is a premium for ULSD versus HO. The second question that the customer asked is something that I think a lot of folks are wondering about, and that is, will heating oil still be available? Will high sulfur heating oil still be available? And this is the point we want to make here. High sulfur heating oil will absolutely still be available in the states that it is authorized to be available in. New York State, you cannot have high sulfur heating oil available for sale. But outside of New York State, there can be. And Sprague, and I'm sure all of our wholesale competitors, will still be offering high sulfur heating oil outside of New York State come April 1st. The customer wraps up pretty succinctly here. Historical rack basis out the window. Thanks for the input, and we'll talk a little bit more about that in a second. I can tell already, Hugh, we're not going to hit 5 minutes, so why bother rushing, right? All right. Everybody who's listening to this, you're deep into it now. Too bad. So, Hugh, my question was about forward contracts. Does this switch have any impact on forward contracts?
By the way, just to start, shouldn't have said anything about 5 minutes this morning. It's this morning's Market Watch. The answer is no. No, there will be no change on forward contracts. This is a representation of our Sprague forward contract screen, of which we are very proud and of which we were the earliest, I think. And you can see, if you looked at those values, you would see that nothing changes. These are all the forward NYMEX values after May that you will see on your screen now or subject to change. So the bottom line is nothing changes on the forward offers. It's going to be the same underlying NYMEX plus the appropriate differential, and that's the story. You can go with that to quote on your quotes or any way you want to think about it.
Let's follow up on that. So if if I'm using this screen to roughly approximate what my pre-buy costs might be to my customers, are you telling me, Hugh, that I won't wake up on April 1st and see these, January, February numbers dramatically different than what they were on March 31?
Not only not dramatically different, you won't see any change except the normal daily fluctuations between the months. One small point, by the way, we are working and expect very, very soon to have these curves up and available on our Sprague real-time platform. It's just a function now of some technical final moves. And here we go. Basis, one more time. Rack basis. The difference between what you see on the screen and what it's going to cost you, or what it's priced at your local terminal. And Taylor, I think you've handled this question many times before.
Sure. So we'll go back to sort of what the customer was alluding to in the conversation that we had, that historical basis patterns may change. We just want to dive into that a little bit more before we let you go. At the end of the day, after March 31st, 2013, if you live anywhere you are, you're going to have the same rack product that you had before, but you're going to have a quote, different futures contract than we had before. So let's go through an example. On March 31st, if Sprague Energy, for instance, is selling high sulfur number 2 heating oil in your terminal location for $3.15, and the prior day, the HO contract, that old high sulfur contract, had settled at $3, one would say that the rack basis that day was 15 cents. There's a 15-cent difference between where the NYMEX settled and where the rack price was the next morning. On April 1st, if we assume, big caveats here, if we assume that in our little example here, the NYMEX didn't change at all, we had a relatively calm day. On April 1st, if you would probably see roughly the same rack price as you saw before, since the NYMEX didn't shift a lot. It's just that the NYMEX contract you're going to compare it to settled at $3.08. This is roughly the 8-cent difference we're seeing today in these futures contracts. And one would say, oh, yesterday the basis was 15, this morning it is 7. Key points: high sulfur heating oil still available outside New York State. And finally, the NYMEX HO contract that everybody who's listening to this has watched on CNBC or their iPhone or whatever, it is still going to be the contract that for the most part drives the bulk of the daily rack price changes that you see day to day. If the NYMEX goes up 10 cents, it's probably a darn good chance that your rack prices for high sulfur, ultra low sulfur, kerosene, whatever distillate you want to talk about, is probably going to go up by roughly 10 cents. Did we cover everything, Hugh?
Taylor, I think that about says it all. I think that's a wrap.
All right. Thank you all very much, and we hope you like the new abbreviated format.